Good morning and welcome to the Business Standard Morning Show. This is Debargya Sanyal. It's the 22nd of September 2023 and here are the questions we'll be answering today. How will the diplomatic crisis affect India-Canada trade? Is the H-1B visa system broken? Will the Fed's hawkish pause worsen FPI selling in India? And what are personality rights? Shots fired in British Columbia about 3 months ago echoed through the aisles of the Canadian Parliament last week. Prime Minister Justin Trudeau alleged that the Indian state was behind the killing of Khalistani separatist and Canadian citizen Hardeep Singh Nijjar. India, however, has strongly denied it. The ties between the two G20 nations have hit a historic low as both countries expelled each other's envoys in the last few days. India has also suspended visa services for Canadian citizens. So, how will the ongoing diplomatic crisis affect India-Canada trade, diaspora and students? Kasturi Akhil and Bhashwar Kumar brings you the answers.
Amid heightened diplomatic tensions between India and Canada came another big jolt to their ties. India on Thursday suspended visa services of all categories for Canadians. This would also extend to Canadians applying for Indian visas from third countries. Meanwhile, those Canadians who already have valid visas and overseas Citizens of India cards can still travel to India. Experts now believe that the latest developments could cast a shadow on trade too.
One is the tourist visa and the second one is business visa for contacting counterparts on the other side or for soliciting business. Now, Canadian businessmen would have presumably been coming on business visas to India. And if indeed the news item is true and India has suspended the visas, I can't fathom a guess whether it is for tourist visas or business visas or for both. Anyway, this I don't think is a good omen, and it is indeed going to hurt our business interests both ways, exports as well as imports.
Just a few hours after Das Gupta's comment, an External Affairs Ministry spokesperson confirmed that India has suspended all visa services for Canadian citizens. Earlier this month, talks on a comprehensive free trade agreement between the two countries had come to a halt. These negotiations were going on for about a decade now. Reports citing government sources claimed it was due to political reasons. And a few days later, during his meeting with Canadian Prime Minister Justin Trudeau at the G20 summit, PM Narendra Modi flagged anti-India activities of extremist elements on the soil of the North American country. In financial year 2023, Canada accounted for a share of less than 1% of India's aggregate trade, to the tune of $8.16 billion. While India's exports to Canada stood at a paltry 1% vis-à-vis the rest of the world, its imports from the latter were even lower at 0.56%. According to Business Standard, more than 600 Canadian companies, including Bombardier and SNC-Lavalin, have a strong presence in India, while more than 30 Indian companies, such as infotech majors TCS, Infosys and Wipro, have invested billions of dollars in Canada, creating thousands of jobs. Companies with operations and exposure to both the countries are bracing for a tough time. Business Standard reported that the trade deal, which is at a standstill now, could boost two-way trade by as much as $6.5 billion.
In the past few years, especially since the relaunch of the FTA negotiations, and this time when the relaunch took place, the two countries got quite realistic, I thought. They focused on the sectors on which they are going to be negotiating, sort of the low-hanging fruit, and they had identified the sectors. And they were going systematically targeting these sectors in the negotiations. Now, those sectors are going to be hurt. I think the visa issue is going to have a snowballing effect. The moment this whole political row broke out, I was thinking that this may actually affect investments as well, because it's just not trade. Now it's going to be investment, because the Canadian government will refuse to bless investors coming into India. And that's a very important part of the whole, the whole process. But now India has blocked entry of Canadian businesses in India. So this whole circle is now complete.
Canadian pension funds have invested over $45 billion in India, making it the fourth largest recipient of Canadian FDI in the world by the end of 2022. For long, Canada has been one of the favorite destinations for Indians looking for greener pastures. Over 1.8 million people of Indian origin live in the country, according to the 2021 census. They now account for more than 5% of the Canadian population.
With India escalating the standoff with Canada by suspending the visa services for Canadian citizens, the effect will also be on Canadian citizens of Indian origin. However, the issue with regard to PIOs is yet to be seen, because PIOs can travel to India without a visa within 15 years from issue of the PIO card.
And now, India has issued an advisory to its citizens asking them to avoid travelling to parts of Canada. Indian students, meanwhile, constitute about 40% of the total overseas student population in Canada. Their number stands at 320,000. And there are concerns that the flow of Indian students to Canada could slow down amid the current crisis.
We were thinking that this will not snowball. This is largely going to be very bilateral. This is going to be behind closed doors. But we are seeing that it has kind of taken a turn for the worse at the moment. I can tell you from our perspective, about 4 hours back, we said that we are going to stop all Canada-driven applications. So we are not going to help any students apply to Canadian universities as of right now till we get more clarity. Because safety of the students is paramount, and the Indian government and the Indian MEA has kind of issued an advisory that we should not be at least, I think for the lack of a better word, not be sending more people from India to Canada for the time being.
Tourism could also bear the brunt of worsening bilateral relations, although those who already hold valid visas may travel to and from their home countries. However, those who wish to apply for fresh visa applications may face hurdles. As India-Canada ties continue to be put to the test, any adverse development could have far-reaching consequences on the latter, which has been one of the top choices for Indian immigrants for several decades now. While both countries could still take the off-ramp in this crisis, Canadian experts have speculated that possible Indian tariffs on Canadian pulse crops like peas and lentils could be the first blow of a trade conflict.
Meanwhile, Canada's next-door neighbor, the United States, is heading into elections. Republican Vivek Ramaswamy last week said that he will gut the H-1B visas if elected to power. Coming from an immigrant family, Ramaswamy has used the H-1B visas 29 times for his pharma company. He believes the current lottery system should be scrapped and the visas should be granted on the basis of merit. Of late, H-1B visa admissions has been getting tougher, giving a hard time to skilled workers from India. So, is the H-1B visa system really broken? Tariq Ahmed looks for the cracks.
Foreign workers make for a critical part of the US labor market, particularly in the field of science, technology, and engineering. US companies that seek to hire skilled foreign professionals compete for the pool of H-1B visa allocated by the US Citizenship and Immigration Services. However, because of the low statutory limit of available visas, its demand has outstripped the supply in recent years. The current annual cap for H-1B visas is 65,000. 20,000 additional visas are offered for foreign professionals who graduate with a master's degree or doctorate from US universities. For fiscal year 2023, the H-1B cap was reached on August 23, 2022. Indians continue to get the largest number of H-1B visas, but the huge processing backlogs are hitting them hard. Before 2020, employers were required to submit the complete H-1B application for the selection process. In order to ease the application process, the US shifted to a lottery system from 2020. Now, the US employer must pay a $10 fee for each registration submitted. After the lottery, the selected applicants are informed to submit the full H-1B visa application with a payment of $460. Meanwhile, the employee needs to register himself in the US Immigration Service portal. But the process has been struggling on multiple fronts. The number of registrations submitted for the lottery has increased many-fold in the past few years, a sharp 60% in 2024 itself. To increase the chances of selection, some outsourcing companies allegedly flood the system with applications. The US Immigration Service website itself mentions that a large number of applicants may have been submitting multiple applications to increase their chances. According to the website, more than 4 lakh of the total 7.8 lakh applications for 2024 have had multiple eligible registrations. So, is the H-1B visa system broken?
In the last 2 to 3 years, it's been more apparent, it's more evident, and there are increasingly attempts to start salvaging it, to kind of start rebuilding it in some sense. Coming down to specifically your question, I think the larger problems have always been around the fact that it's lottery based. It's not really meritocratic as it should be. Traditionally, it's been used by employers in the US to hire low-cost workers. I think no country would like that. And when there's a very clear demarcation around a higher wage allotted to a US citizen for the same job, and you bring in somebody and allot a lower wage to them, I think that is never cool. Any country would kind of not be okay with that. So that's been a big problem. And also, I think a lot of IT firms, a lot of those IT firms with outsourcing-driven models have not used it the right way. And I think that has led to a lot of heartburn.
Also, for existing H-1B visa holders, obtaining a green card remains a long-drawn process with delays and numerous complications. Families accompanying H-1B visa holders have also been facing difficulties recently. On the brighter side, the denial of a new H-1B visa for initial employment is coming down. From as high as 24% in FY 2018, it has decreased to 4% in FY 2021 and only 2% in FY 2022.
The other challenge is with this second leg of the H-1B visa, which when it becomes an issue with respect to immigration or citizenship, there is no clarity on when anyone would get this green card once they make the application for the green card also. The data from the USCIS is limited. They will only tell you that your application is under consideration and how much the backlog is. So typically the waiting period is about 10 to 15 years. This is also anecdotal, so it is not something which is out in the public domain. And 10-15 years is a very long time. So because of the cap, the lottery system, even people who go there are on the H-1B visa, their future in the US is uncertain. A lot of other challenges dealing with that, because their children may grow up, they may not be able to convert into citizenship, so they may have to come back to India. So all of this is some of the challenges in the system, and the lack of information from the USCIS sometimes.
While there have been protests in the past that H-1B visas are robbing jobs from Americans and lowering their wages, experts point at the lottery mechanism as the biggest problem in the system.
Some other countries like the UK has a points-based system, and even Canada. So depending on where you fall within the point scale, you will know at least whether your visa will be approved or not. Right? So if you are for example, if you are a master's graduate, or if you're in a certain industry, you're in an industry which needs which they are promoting. So all of that gives you a set number of points on the scale if you're under a certain age. So depending on this, at least you'll have greater clarity on where you will stand vis-a-vis your visa, whether you'll even get it or not, rather than subjecting everything to a lottery stage, which is completely dependent on external factors.
Recent reports indicate that the US Citizenship and Immigration Services have proposed modifications in the H-1B visa program to modernize it. The changes include aspects of employer-employee relationship, guidelines for officials, and anti-fraud safeguards in the e-registration system. While high-skilled immigrants continue to be integral to the US's economic growth, the changes are also eagerly anticipated by Indians aspiring to achieve their American dreams.
In another news from the United States, its central bank signaled Wednesday that higher interest rates are here to stay. They are the new normal. It triggered panic selling in most global equity markets on Thursday. Back home too, benchmark indices fell 2% in 2 days. With the US dollar and yields strengthening, has the Fed given FPIs more reasons to sell Indian equities? What does the road ahead look like for the markets? Nikita Vashisht and Puneet Wadhwa take a deep dive.
An extended pause in the rate hike cycle by the US Federal Reserve on Wednesday night saw most global equity markets lose ground on Thursday. While key Asian indices sank over 1% each, domestic benchmarks nursed losses of 0.8%. With this, the BSE Sensex has tumbled nearly 1,400 points in 2 days, while the Nifty 50 has dropped from over 20,100 levels to below 19,750 levels. Analysts believe that the Fed's forecast of another rate hike by the year end and tighter monetary policy through 2024 than previously expected stirred the hornet's nest, while market watchers remain uncertain if economic conditions would be conducive enough to weather another rate hike. They believe Asian markets are in for a turbulent phase. According to Nomura, equities will likely see some pressure in the very near term as rising US bond yields, stronger US dollar, and elevated energy prices are all bad ingredients for Asia. As regards India, Jyoti Vardhan Jaipuria of Valentis Advisors is penciling in a time-wise and price-wise correction.
Strong dollar per se is always negative for emerging market flows. We always want weaker flows. So to that extent, it would be probably mildly negative for emerging market flows. For most people, India is like the go-to market for the next few years because everyone, the consensus believes that India is going to be the fastest growing economy. So to that extent, this may hurt flows a bit, but it's on the margin. In fact, the other thing which is probably hurting flows to India more is just the valuations. Generally valuations are not cheap, and they're not cheap in the India context if you look at history, but they're even more extreme if you start looking at India relative to emerging markets. So that's what we've been hoping, that we get a time and price correction so that valuations become a little better.
The US dollar index is at a multi-month high of 105.5, having risen for 9 straight weeks. This is its longest winning streak in nearly a decade. Yields on the US 2-year and 10-year treasuries are also hovering at their highest level in over a decade, prompting foreign institutional investors to take out more than 13,900 crore rupees from Indian equity markets in September. As the outflows are expected to intensify in the near term, ICICI Securities expect Indian markets to remain volatile. The future trajectory, they believe, will be dependent on how fast the interest rate hikes come to a halt globally and dent the economic growth. As a strategy, ICICI Securities suggests investing in equities in a staggered manner over the next 3 to 6 months, using corrections for making lump sum investments. On September 22nd, interest rate decisions of the UK and Japan will be on the investors' radar, amid diplomatic developments between India and Canada.
He's making plans for an early retirement. Business Standard.
Ripples from the United States are also being felt in India's entertainment industry. With the debate around AI and actors' rights gaining momentum, personality rights are the latest arena of contention. Recently, the Delhi High Court passed an interim order protecting the personality rights of actor Anil Kapoor. The court has restrained various entities from misusing his name, voice, image, likeness, manner of speaking, and gestures, among others. But what are personality rights? Raghav Agarwal explains.
It gives an individual the right to control how their name, appearance, or other distinctive identifiers are used for commercial purposes. These rights are crucial to celebrities as their names, images, and in some cases, voices may be used by companies in their commercials to improve their reach and sales. It is at times misused too, like what Anil Kapoor's advocate claimed in Delhi court. There are two types of personality rights. One is the right to privacy. It protects individuals from having their identity revealed without their consent. Second is the right to publicity. Under this, individuals are protected from the use of their images for commercial use without consent or financial compensation. The personality rights stand at an intersection between Article 19 and Article 21 of the Constitution. Article 19 gives the media the freedom of press. It allows them to gather and publish any information for the sake of public interest and public concern. Article 21, however, gives people the right to privacy and the right to be left alone as an extension of the right to liberty. In the 2017 KS Puttaswamy case, privacy was acknowledged as a basic right under Article 21. Indian law does not exclusively mention personality rights. However, several acts like the Indian Copyright Act 1957 and the Trademarks Act 1999 have acknowledged these rights indirectly. The provisions of the Indian Copyright Act state that an author or performer has the right to receive recognition or claim copyright for his work. They also have the right to prevent others from causing any damage to their work. Under Section 17, 38, 39 and 52 of the Act, a performer or artist has the sole control over their reproduction. Under Section 2M of the Trademarks Act, names are mentioned in the definition of a trademark. Section 14 of the Act deals with the use of the name of a living or a recently deceased person. In 2011, in the Titan Industries versus Ramkumar Jewellers, the Delhi High Court ruled that a prominent person's name is exploited in advertising without their consent. It added that commercializing the name is not an objection, but the person must have the power to decide if they want it to be used or not. Later in 2015, South Indian actor Rajinikanth moved the Delhi High Court against Varsha Productions for using his personality traits. The court ruled that while there is no definition of personality rights, courts have recognized that these rights exist. Later in 2022, Amitabh Bachchan won the case against Rajat Negi and others. The Delhi High Court prohibited the public from using Bachchan's name, image, voice, or any other characteristics without his recognition.
I'm backed by the nation's trusted bank, FPI, the banker to every Indian.
But what if someone shares the name of a celebrity and wants to use it? In 2018, cricketer Gautam Gambhir had also dragged a Delhi-based company called DAPN Company to court for using his name as a tagline for its restaurants, pubs named Ghungru and Hawalat. Interestingly, the owner's name was also Gautam Gambhir. The cricketer had lost the case. Well, that's all for today. For more news and analysis, please log in to business-standard.com. Thanks for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.